You just sign the lease on a bigger space for your business. Then the contractor's quote comes in and it's twice what you budgeted for. Most business owners in that spot think they only have two options: drain their savings or scale back and the renovation and hope it's good enough. There's actually a third option. Almost nobody brings it up, including most of the time your own bank. Here's why this catches so many businesses off guard. Renovation and leasehold improvement costs are notoriously hard to estimate accurately before you're actually inside the space. Contractors find things behind the walls, permits take longer than expected, and material costs shift. When the number comes back higher than expected, most owners assume that a bank loan either isn't available to them or that it'll require collateral and a track record they don't have yet, especially if the business is new. That assumption is the expensive part. There's a federal program specifically designed to make banks more comfortable lending in exactly this kind of situation. And a lot of business owners simply never ask the bank about it by name. It's called the Canada Business Financing Program, or CSBFP. It's not a grant, nobody hands you a check. It's a financing program delivered through banks or credit unions. Here's the mechanism. The federal government shares the risk with your lender. If your business can't repay the loan down the road, the government has agreed to cover a portion of the loss for the lender. That changes the lender's calculation. They're more willing to approve the financing they might otherwise turn down. And leasehold improvements, the exact renovation problem we started with, are actually one of the main things this program is built to cover. Now, who actually qualifies? This is where a lot of business owners rule themselves out too early. You don't need to be an established business. Startups qualify. Picture a two-person company that hasn't even hit its first year in operation. That business is still eligible as long as gross annual revenue is 10 million or less. There's one clear exclusion: farming operations. If your business is a farm, this isn't the program for you. There's a separate program that applies instead. In terms of numbers, term loans through this program go up to 1,150,000. But there are sublimits depending on what the money is actually for. Equipment and leasehold improvements combined are capped at 500,000. If you need working capital on top of that, inventory, day-to-day expenses, there's a separate line of credit option up to 150,000. There is a cost to using this program, a 2% registration fee based on your loan amount paid to the lender. It's disclosed upfront, and importantly, you don't have to pay it out of pocket. You can roll it into the financing itself. So what can the money actually go toward? Leasehold improvements, renovating a space you're leasing, exactly the situation a lot of growing businesses find themselves in. Equipment, new or used. You're not required to buy everything that is brand new. This includes production, equipment, and computer equipment. Commercial vehicles, vehicles used for the business, not personal vehicles. What it's not designed for is your everyday operating costs, payroll, rent, that kind of thing. This is the capital heavy stuff: the renovation, the equipment, the vehicle. Here's something important. You do not apply to the government for this. You apply directly through a financial institution, a bank, a credit union. That lender reviews your business proposal and makes the actual lending decision. The government isn't approving or rejecting your application. The bank is, using this program as one of the tools available to them. Because of that, approval isn't guaranteed. Just because your business fits the general eligibility criteria, it still comes down to the lender's assessment of your business. Here's an illustrative example. Say you run a small retail business and you've signed a lease on a larger unit. Your renovation quote comes back at 180,000, and you also want to pick up a used delivery van for 25,000. Both of those, the renovation and the van, could potentially be covered by the program, subject to the $500,000 combined cap on equipment and leasehold improvement. You'd still need to bring your proposal to a bank or credit union, and they'd make the actual decision based on your business plan or financials. This example illustrative only. Your actual eligibility, the amount you could borrow, whether you'd be approved, depend on your lender's assessment and the program's current rules at the time you apply. First, assuming this is a grant, it's not. You're borrowing money and responsible for paying it, just like any other loan. The program changes who takes on the risk if things go wrong. It doesn't erase the loan itself. Second, assuming the maximum amount is guaranteed. The 1,150,000 figure and the sublimits underneath it are ceilings, not entitlements. What you're actually approved for depends on your lender. Third, not asking your bank about this program specifically. A lot of business owners get a quote on a conventional loan, get turned down, or offered less than what they need, and never find out this program existed. If your bank has brought it up, that doesn't mean you don't qualify. Ask directly. If you're trying to figure out if this is worth exploring, here's what to prepare before you walk into the bank. Have a clear breakdown of what you actually need the money for. How much is renovation, how much is equipment, and how much is working capital, because that determines which part of the program applies and what the sublimits look like for your situation. Have your financials in order. Because the lender is still making an actual decision, a well-prepared business proposal matters just as much here as it would for a conventional loan. Ask specifically whether your loan will be structured under the program or as a standard commercial loan. The terms, the risk sharing, and the fee structure are different, and you want to know which one you're actually getting. So to bring this together, the Canada Small Business Financing Program is not free money. It's a way to make it easier for your bank to say yes. So to bring this together, the Canada Small Business Financing Program is not free money. It's a way to make it easier for your bank to say yes to financing you might otherwise be turned down for, covering leasehold improvements, equipment, commercial vehicles, and working capital, with the government sharing the risk with your lender. If you're starting down a renovation quote that is higher than expected, or you've been turned down for financing as a newer business, it's worth finding out whether this program applies to your situation before you assume the answer is no. Reach out to our team and we'll help you figure out whether this is worth pursuing for your business. Keep in mind, eligibility requirements, funding limits, and program availability can change, and the final lending decision is always made by the financial institution. Confirm your current details before making any financial decision.